The real estate crisis in China, the old problems still haven't been resolved, but now it looks like a new wave, 2.1 style, is about to begin. Right now, China Vanke, once one of the largest real estate developers in China by sales, has announced that it is likely to default on its debt. Vanke has requested to postpone the repayment of bonds worth up to 2 billion yuan. They're asking for a delay. At first, investors were really shocked because Vanke is such a huge company. Honestly, it's a real estate developer that you wouldn't expect this to happen to. But things you think could never happen have already happened before, whether it's Evergrande or Country Garden. Let me tell you, some people thought, hey, the US has a housing bubble, maybe I'll move to China for a bit. Before you make that move, listen to this information first. Support information about China's new real estate crisis. It looks like it's coming again, and you can do so with this QR code. Or if you want to support the Psy Money Monster channel, it's super easy. How? Just hit like, share, or leave a comment to chat with us. But what I'd love most is if you could subscribe. Once you hit subscribe, you don't have to do it again. So next time I upload a new clip, we can meet again. Sound good? Thank you. Vanke has requested to postpone the repayment of 2 billion yuan in bonds. This is a clear sign of a new real estate crisis in China. Investors are really scared right now because that 2 billion yuan was actually supposed to be paid back on December 15th, but Vanke has already said that. They're asking for a postponement because they can't make it in time. And that 2 billion yuan due on December 15th is just a small part of the whole picture. From December 15th all the way to June 16th, 2026, it's not just 2 billion yuan. They actually owe a total of 13.4 billion yuan. Now investors are starting to worry. Like, if they already have to delay the 2 billion, will they really be able to pay back the rest, over 10 billion yuan, on time? It's one thing to pay late, but the real question is whether they'll pay at all. That's what's even scarier. This fear among investors is exactly what caused Bank G's bond prices to plummet, dropping a massive 35% on November 26th. The reason investor fear can make bond prices crash like this is because of how bonds work. When people buy bonds, they're basically creditors. So those who bought Bank G's bonds are actually its creditors. So they're basically Bank G's creditors. Bondholders expect their principal back on schedule plus interest. That's what repayment means, paying back the principal plus interest. But when Bank G wants to postpone repayments, it means their financial situation isn't good. If things were fine, they wouldn't postpone. So this really damages their credibility. Investors start worrying, what's really going on with Bank G's finances if they're postponing payments? So if they're postponing, are we even going to get our money back? That's where the fear comes in. Like, what if they postpone and then we end up not getting paid back at all? Because big companies have collapsed before, right? So investors start thinking, better to get something back than nothing at all, to sell it off now and get your money first, then figure things out later. That's why so many investors rushed to dump their bonds before they matured. This caused the price of banking's bonds to crash, dropping by as much as 35%. And this is the same model as with other companies too. If you buy bonds and then something like a debt payment postponement happens, the bond price can plummet for exactly the same reason. It's the same mechanism at work, and we can apply this understanding elsewhere. And of course, with Vanke losing credibility like this, right, investors are dumping their bonds left and right. And Vanke's stock price, which is listed on the Hong Kong market, has also taken a nosedive. In this situation, a lot of people have said that if the government doesn't step in to bail out Vanke, it might end up collapsing just like Evergrande and Country Garden. But the Chinese government has stuck to its original policy, saying it's unlikely to intervene. Because if the government steps in to bail them out, if the government bails out one real estate company, then there will be many other companies demanding the government step in to help as well. And the government's budget probably wouldn't be enough to bail out all of them while still keeping China's economy in good shape. Fu Lingwei, the spokesperson for the Chinese government, came out and said that China's real estate sector is, in fact, currently in a transition period from the old model to developing a new one. And during this transition, it's gonna take time. So right now, Property prices are still fluctuating, but that doesn't mean the Chinese government is just going to abandon the real estate sector altogether. Basically, their stance is that if a company collapses, the government won't step in to help. But for those that are still standing, the Chinese government is still rolling out stimulus packages for the real estate sector. For example, they've introduced packages to help with mortgage interest rates for new home buyers. The government will help with the market interest rates, which means for new home buyers, they can buy a house and pay off their mortgage at a lower cost because the interest rates have gone down. But when it comes to the Chinese government's economic stimulus, it both reveals and conceals certain things. What's clear is that the Chinese government stimulus shows that the real estate sector in China still desperately needs help. As for what the government stimulus doesn't reveal, what is it exactly? It doesn't say whether it will actually work, but the fact that major companies, even big banks, are now showing signs of internal financial problems tells us that if China's economy is having issues at the grassroots level, those problems can eventually grow into something much bigger. Let's take a look at some of China's economic numbers, starting with the smallest scale, retail sales growth. This means looking at how much Chinese people are spending and shopping at various stores. If we look at retail sales growth, we'll see that it's been declining for 6 consecutive months. Most recently, it dropped to just 2.9% in October, which is the lowest it's been in 2025. This means that Chinese consumers are starting to tighten their belts and spend less. Next, let's look at the factory level. China is known as the world's factory, right? So industrial production, the output from Chinese factories, is a key indicator of China's economy. We can see that factory output in China is also at its lowest point of the year. In September, it was at 6.5%, but in October, it dropped to 4.9%. When factory production goes down, what does that mean? It means orders are down, and when orders are down, revenue drops too. In the investment sector, we mean fixed asset investment, spending on infrastructure and factories. China aims to expand its economy, so infrastructure must support that growth. But let's see how investment is actually doing. Fixed asset investment in China has dropped for 7 consecutive months, falling to minus 1.7%. This shows Chinese businesses aren't building new infrastructure. If factories aren't investing in building new plants or expanding their production lines, it could mean that the planned future growth might not actually happen. Because if you don't build today, there won't be anything tomorrow. And since this video is about real estate, let's take a look specifically at investment in real estate. Property investment has been negative all year as well, and right now it's down by 14.7%. It's not looking too great, but don't forget that China is the world's top trade surplus country. They make the most profit from selling goods globally. That means the export sector. Exports are actually China's main source of income, the reason why the country has so much money. So let's take a look at the export sector. If we look at exports from the beginning of the year up to around September, China's exports have still been doing well. In September, China's exports grew compared to last year. 8.3%. I think that might be because people rushed to buy goods from China before the trade tariffs and barriers that Donald Trump put in place, right? And you can see that from 8.3% in September, by October, exports compared to last year actually dropped by 1.1%. That's not a great momentum. Oh, and one more thing, I almost forgot. Someone once told me that if you want to gauge the health of China's economy, you should look at this. At housing prices, because housing prices reflect the real estate market, right? So is China's real estate sector recovering yet? If housing prices start to bounce back, it means the real estate crisis is improving. That's why we should look at housing prices. As for new home prices in China, the latest data shows they're still negative, down by 2.2%. And UBS has come out with a forecast that housing prices in China will continue to drop for at least another 2 years. And there's another company, Fitch Ratings, which also released a forecast saying that housing prices in China are expected to drop another 15 to 20% from current levels. But when it comes to the overall health of China's real estate crisis, if you look at it from the perspective of foreign companies, they still see the situation as bad for a long time to come. All of this means that overall, China's economy isn't doing so well, whether it's consumer spending or anything else. Manufacturing output is down, factory production is down, and investment is down. Whether it's fixed asset investment or property investment, it's all declining. Export growth is also dropping, and it's a clear drop, down by 1.1% from last month, now at 8.3%. And housing prices haven't improved. They're still in negative territory. It's gotten to the point where we're starting to see signs of defaults, even if they haven't officially defaulted yet. Requesting to postpone the payment of 2 billion yuan in bonds by Bank G is another clear sign that the overall Chinese economy is slowing down right now. It's just not doing well. It's really not working out that great. All right, now that we've gotten to this point, I want to go back and explain why China still hasn't been able to deal with this real estate crisis in the country. Honestly, it's been going on for 4 years now. China is a huge country with a lot of money and a lot of resources. So why can't they handle this real estate crisis? It's because it's not just a real estate crisis. It also involves shadow banking. When you put it all together, we're talking about an enormous amount of money. So much that it's hard to even call it just a huge sum. The debt itself isn't the only issue. It's the sheer amount of bad debt that's piling up. And if some people are wondering, wow, investors are this scared because Vanke said they're going to delay bond repayments, does that mean Vanke is having financial problems? Of course they are. Their timeline lines up exactly with other Chinese real estate companies that are also in trouble, which I'll explain in a bit. But as for Vanke, they've actually announced their financial results before. They've been running a loss of up to 49.5 billion yuan since March 2024. But if you're asking when exactly the Chinese real estate crisis became this severe, let me break it down for you. It's been serious ever since Evergrande collapsed. August 2024 was when Evergrande went bankrupt and disappeared from the trading board entirely. Investors were absolutely panicking. And since Evergrande's collapse, it's dragged down all the other real estate developers as well. And this led to the largest bad debt crisis in China's history. Evergrande was founded in 1996 by Hui Kaiyan, and it expanded incredibly fast, mainly by borrowing money. Evergrande became the most heavily indebted company among its competitors in Chinese history, with total liabilities reaching around $360 billion by the end of 2021. At its peak, Evergrande's company value was as high as $50 billion US dollars. That was its absolute high point. In 2017, this made Hui Kaiyan the second richest person in Asia. At that time, China was also booming. The country's GDP grew by double digits for many years, right? But that was exactly when no one realized it, and that was the beginning of the disaster. Because when China's economy was booming, it was booming thanks to real estate. But the classic root of the disaster that started back then was that people were buying homes. People were buying just to speculate. Whenever this happens in any country, that country ends up in trouble. In the US, it was the subprime crisis. In Thailand, it happened during the Tom Yum Kung crisis. At that time, real estate in China was growing rapidly, so much so that people couldn't even see where the peak would be. But did they forget to notice that all that growth was fueled by loans? And those loans came from shadow banks. These banks weren't really formal financial institutions. They were shadow banks. And as the value of real estate kept rising, what happened? People started FOMOing, afraid of missing out. So they poured their money into real estate. Because when things are booming like that, honestly, no one can see what the downturn will look like. But when things hit their absolute peak, that's actually when a crash is near. This is one of the key lessons I want everyone to remember. When something's skyrocketing and rising super fast, be careful. It's pumped up and could be on the verge of collapsing. For example, look at Shanghai housing. From 2003 to 2010, prices went up 150%. This made home prices in China from 2005 to 2011 way overvalued, creating a bubble that hadn't burst yet. But honestly, when the real estate sector started turning into a bubble, the Chinese government noticed. They realized that, hey, if things keep going like this, there's definitely going to be a bubble, and it's bound to burst. So the Chinese government introduced measures to control the real estate bubble. Basically, they set rules to prevent people from speculating too much in real estate. For example, they required a 40% down payment if you wanted to buy a house, or they set restrictions, like if you wanted to buy a house in Beijing but hadn't lived there for at least 5 years, you wouldn't be allowed to buy. For example, people could only buy one house. the government clamped down and imposed strict controls. But even though they stepped in to manage the bubble itself still hadn't burst yet. At that time, the IMF even warned that China's real estate demand was way too high. I have to say, this real estate bubble was truly an unfortunate period for China. Because right when the real estate bubble was at its peak, what happened next? COVID hit. And if that wasn't enough, that same year, Donald Trump announced the first round of the trade war against China, imposing sanctions on Chinese goods. So at that time, China was hit by both COVID and the trade war. Actually, the trade war came first, then COVID. Facing both of these at the same time really caused Chinese capital flows to come to a halt. The financial lifeline that kept businesses running, once the cash flow stopped, everything came to a standstill. And when cash flow is disrupted, it's like the blood of the economy stops circulating. If cash flow stops, it's just like blood not flowing in the body of the economy. For China, that's a really bad situation. And if China's economic activities, buying, selling, importing, exporting, can't happen, then people will start running out of money to spend. People were investing in real estate, right? And at that time, the Chinese government clearly saw the warning signs that if they didn't do something, the bubble would definitely burst. So they called in all the major real estate development companies, 14 companies in total, to have a discussion. There were 3 things that these real estate developers had to do. First, they had to set limits on their debt-to-cash ratio. They couldn't have more debt than cash on hand. Second, the debt-to-equity ratio. Debt couldn't exceed equity. Third, the debt-to-asset ratio. Debt couldn't exceed assets. But one company stood out most. That was the first to collapse, Evergrande. They had over $300 billion in debt. They grew by borrowing aggressively, focusing on offense over government compliance. In the end, they were the first to fall. The government didn't help. After Evergrande collapsed, what happened was that people came out to protest because they had invested their entire life savings in real estate. In December 2021, Evergrande Group defaulted on its debt. On August 17, 2023, Evergrande Group filed for bankruptcy in New York. Then, on December 3rd, the bankruptcy court in Hong Kong was able to order the company to be dissolved immediately the very next day. After that came Country Garden, a real estate developer 4 times bigger than Evergrande. This caused all sorts of businesses that depended on these 2 companies, whether they were part of a supply chain, resource suppliers, or subsidiaries, to collapse as well. That's 40% of the country. And don't forget what I mentioned earlier. What fueled the growth of real estate? Loans. And where did those loans come from? Shadow banks. On November 23, 2023, the #1 shadow bank or trust in China, which was a major lender to the real estate industry, declared bankruptcy along with its debts. 460 billion yuan, and the China banking events signaled that there might be a debt default happening. This is proof that the real estate crisis in China isn't over yet. It's never been over, and it's actually spreading and getting deeper. But don't forget, China is huge. Its economy and businesses are massive, and so is its real estate sector. It's a major part of China, but it's not everything.